Hey everybody. Welcome back to Freedom Algo. Sorry, I was just making sure the stream was working properly. I think we're all good. Alright, I just got back, so I haven't even had a chance to really look at this price action. I was away from the computer for a while, so you'll have to bear with me. I haven't had a chance to chart out any of this stuff over here. So, that's just what it is, because I just got back. I had to do an event at the kids' school. Here, let me move my self over like that. Okay. That way I won't be blocking the price action for now. All right. Well, let's get into the trade setups. Happy Friday, everybody. Let me know how you're doing. I think I saw Misha in the chat, but where'd it go? Oh, my chat disappeared on me. But welcome everybody. All right. So, happy Friday. So we have a downtrend that was in the overnight, and right at the open it broke outside. So there was a clear downtrend in the overnight coming in. We never quite made it back. Here, I'll put it on the chart. This is yesterday's close. Right here. I'll always make it brown. Brown. And then I'll extend it to the right. So that's yesterday's close, which would be our target to come up to. We ended up going down in the overnight. And then as this downtrend went, there was some news at like 5:30. So you can see this big 161 tick candle. Some volatility that followed. It was pretty volatile. Pretty high ATR, as you can see at the top there. And so as it came down, you can see here, we started to kind of cut in sideways. Now, there's not really much shorts down here. And you can see what happens. Like, a lot of people probably got trapped over in this area because there's an inside bar there. There's basically a second entry short, but you can't take an inside bar. And this is why they're dangerous. You see what happens. Can't mess with inside bars. Just not worth it. Technically, this is kind of like a lower high, sort of. It's kind of a weird one because it breaks below this bar and then gives you a lower high, but it's not a very bearish bar. Then it comes back, and there's another first entry, second entry short, lower high here, but that's dangerous. Yes, it is below the EMA, but look where we are. We're in the lower half already of this down channel. You need something more definitive. I think you really need to come back towards this trend line before you really think about taking a short all the way down here. And at this point, it was starting to look way too sideways. I don't have it on here, but you can see very clearly, like we had just come down to this low and basically bounced. So shorting there just seems sketchy. You're probably shorting right into a support, and that's exactly what happens. So just not a good idea. Thing runs up, and not really much here besides finally a close outside, and then it reverses, but you can't really take anything here. There is a setup here. I wouldn't call this... Wait, did one of my... Oh, no. All right. I wouldn't call this a great setup. But if you drag this level over, you can see here. And also, it would have been... You would have had to been fast to really see it this way. But if you drag this across like this, you can see a 1, 2, 3 triple test. And it is a second entry long. So it's a pullback first entry, pullback second entry. It looks like measured move to me. Measured legs. Sorry, my mouse is being real strange right now. Hold on. Sorry, my mouse was being super buggy. Alright. It's not really exactly measured moves, but you can kind of see it's like 2 legs back. It's a close outside, 2 legs to a new low. So if you took that one, it's pretty reasonable. You have to wait for it to close though, and at that point it's a really big bar. I think it works, but it's just, I don't love it. And then the higher low is too neutral to take that. So I don't know. It's okay. I don't love it, but it's okay. All right, so then we break down. I don't see anything down here. You make another leg to a new low. And now at this point, you'd be kind of thinking, okay, maybe this was at like two bigger legs like that. So you got your two legs down. You got a new low made on the down channel, but it kept staying kind of bearish. So I drew a flatter channel here as a possibility. There's no shorts in here because this is an up move. So you can't take anything there yet. No longs in here. Two sideways. You gotta wait. You're in a downtrend slightly. Just nothing really in this. Two sideways here. It's like it looks like a miniature range. So I just had to wait, and I didn't see any triple tests or anything good. Then we move up, close outside, new high on this little channel. Rejects that same level, goes back down, tests below once and then twice again. So you kind of have three tests here, but it's not a triple test. This broke all the way through and closed. So you can't really take this long. It was tempting, but you can't take it. It does look like a nice little trap. Probably trapping all these shorts who try to take the breakout. Most breakouts fail. So this does look like a failed breakout trap. I really think you want a higher low there. I mean, if you wanted to be extremely aggressive, you could trade this as a failed breakout and trap on the engulfing bar there. You probably would want to wait for it to close fully, but it is really risky and it's a huge bar. It's 37 ticks. I just think that you're playing with fire if you mess with that. I don't think it's really that great. I didn't take it. I'm just saying, like, if you wanted to be extremely aggressive, that is a possibility because it is, you already have made the new lows. This is making a new low on this channel. You already made the new low on the other one. Everything's been met, and it's not really a strong trend down anymore. So there's some reasons to like it. I really wanted a higher low there, but it just never came. So then this runs up and you get a first entry, second entry short above the EMA. That's a failure forming. Everyone who went short here has their stop losses one tick above this bar right here, which is literally where you enter on the second entry long. So it's a second entry long, failed second entry short. If you took this though, you have to get out. You have to get out probably one tick before this blue bar, which I drew off of this close here because that was kind of like a level that was getting somewhat respected. So you can't go for much here. You have to scalp this because of the resistance and because of the highs. It's very dangerous because you only have about 2 points or so to the actual high, not even. What is that? Sorry, it's 1.75 points. It's not much. And you only have 2.75 points to that level. So, I mean, at the most, you don't want to be getting more than, maybe 7 ticks there. I don't think you want to mess with too much there. And so it's a lot of risk for how big of a bar it is. It's a 30 tick bar. So I just don't know if it's really worth it. I didn't take any of those three. I ended up actually having to leave because the kids had an event at their school. So I ended up not even getting any trades today. I had to leave to take the kids to an early event. It was bagels and books. So it's like they had a book fair and they had like books for sale. There's some free books and then they serve bagels or whatever. So that's what we were doing. So I ended up having to leave early this morning. I left at I think it was just before 7:30 Pacific. I originally had this drawn as a possibility, but it ended up not really coming into play. As you can see, it just kind of got smacked straight through. So there's not really anything great in that. We get a little up channel, and let's see if there's any trade setups in here. It looks kind of like a spike in channel here, but I don't know. It's kind of a weird one. Yeah, I mean, no, you can't really. It's kind of a channel, but it doesn't get really respected here. Drag this up just a bit. Okay. I don't see anything great here. Yeah, I don't see anything. There's this, there's not really any good second entries in there. So you're probably not missing much if you didn't take anything up that way. Let's see if we get anything on the downside here. So that didn't get the right spot. So we will track this here. I would draw this pretty tight, probably like this. And then you gotta get a close outside, new low happens, and then it makes another leg down. This looks like possible a little bit more than a measured move. Yeah. So this is kind of a all one move down. I think this, I don't know if this breaks higher. What's that? Seven. Yeah, all one move down, and then there's a first entry, all one move down. This is actually a second entry long right here. So this is one of those ones where, like, it's risky to take it. It is definitely risky to take this here. Like, not a super high probability of success, but it's so far from the EMA, and it's a big two-legged correction. It's a second entry long. Higher low would be much safer there. But if you took that one, I would understand. I would understand your reasoning. You know, you got a lot of room back to the EMA. It's like a mean reversion style trade. The problem with trades like this, though, I'm just going to mark it and then show you. The problem with trades like this is that when you have two big legs like this, you don't always know if you're not forming something that looks like this. Like, what if this is a down channel? You have room to the high there. You don't really want to long in a down channel, but you don't know for sure that you're not forming one of these, right? Because you don't have a third swing on the upside of it. So that's the challenge with something like that. You don't always know when it's forming for sure if that's going to, like, pan out. I think a higher low would have been better there, but that's another one that if you took that, there's reasons to definitely like that one. Sometimes when you get those mean reversion trades, you get really nice runners. So they are sometimes worth it. Like, sometimes the yellow arrow trades are the ones that actually give you the biggest runners, and that's important to be aware of. So there's kind of a risk reward to that. This thing runs higher here, and I'm using risk reward not in terms of like the normal way that risk reward's used in trading. I mean, like, sometimes it's worth taking the risk because there is a high chance of that one having a runner for you. I'm not using it in like the numerical sense. All right, so this thing goes higher, close outside, new high, and now we're sideways. So now we can probably draw a range of some sort. I'd probably just draw it from the high to the low, like this. That's what it looks like to me for now. And so we can see if there's any sort of trends in here. Okay, something like that. Close outside. This is a second entry short. So that's another one that you could probably take. Those bars look enormous though. Well, how big is that? 34 ticks? Sheesh. That's a second entry short. Expecting a new low. That one is pretty reasonable, I think, because you do have room to the low. You don't have a ton of room though, so I have to mark it yellow. I mean, it's just not a lot of room to the actual low. So it bounces here. I don't know. You're not going to take this second entry short. That's too sketchy. It's actually kind of a weird engulfing one anyway. I don't even know how that formed in real time. You're not going to take that or the lower high. You're not going to take those here because you already just made the new low. So you got to be patient. You get another low here. Again, I'm not going to take that. There's a triple test over here, but the bar is bearish, so you can't take that. Let's see what we got up this way. No. No. All right. No, nothing there. For second entry long, but that's taken a long in the middle of a range. Not a good idea. Because at this point, the range is pretty confirmed. So you don't want to do that. Triple test, but bullish bar. First entry, second entry long failure. Makes sense that there's a failure there. You didn't even touch the range. So that's not really worth taking anything in there either. You can probably just draw this if you want to, but it's kind of a weird one. But you could draw this. You're expecting a new low there. You get it. There is a failure, but I don't think you want to take the failure either because you don't really have much room to the low. Yeah, it's just too sketchy to take that, I think. You're playing with fire. not worth it. So that's pretty much it today so far. Looks like there's about 5 setups that I see. Again, pretty volatile day, pretty risky overall with what's going on with some of the setups. So we'll have to see. The volatility is pretty extreme. Makes sense. There's a lot of stuff going on in the world right now. People are freaking out like always. If you got questions, put them in the chat. Sorry, I just had to reply to something real quick. Alright, my bad, everybody. My bad. Okay. Okay, let me go in order here. John. Triple test 853. Okay, 853. 21. Let me find it. 853. 21. No, that's not a lower high. That's not a lower high because that bar is an inside bar of this bar. So in order for it to be a lower high, we're not on Zoom, so I can't draw it as well. You would have wanted to have like a bar that was like maybe like right here. Pretend this arrow, this blue arrow is like a bearish bar. So what I'm saying here is like you have this bar, and then you get this one that tries to go up and then reverses because this is not a new swing. You needed to have a swing there. So you need, you know, something like this, for example. You have a bar, another bar, and then this bar swings up. So this bar is a lower high than this bar, and then it technically goes higher. So this bar is the lower high, this red one. So here, it's just an inside bar next to it. This is just going down. You don't have a swing up in between the bars or anything. So no lower high there. That's an inside bar. I don't mess with inside bars. Stay out of those. Those are dangerous. Okay, Misha, how do I make the current price cast a horizontal line across the screen? Oh, this thing? What the heck? Why did my music just shut off? Hang on. That was weird. Huh? Hold on, I gotta see. That was weird. Let me lower the quality of it. Hold on. I realized I was streaming that video in 4K for no reason. Okay. So how do I make the current price cast a horizontal line? That's built into my toolbar indicator that I have. So that's built into my indicator. I don't know. There might be here. Let me look at my settings real quick. I'm gonna hold on. Let me look at the settings and I can tell you, because it's been a long time since I looked at I'm pretty sure. I'm trying to see if there's a way to do it on NinjaTrader by default. I mean, it's built into my toolbar. I know that. It's built into my toolbar. Yeah, it's built into my toolbar. So I don't know. I don't know, actually. Here, let me just show you. I don't want to pull it up. It's like You know, it's for you. You're in the if you're in the Freedom Algo community, so you should have access to it. It's built into my indicator that I use, that I built, the Freedom Algo toolbar that I built, the toolbar and price action kit that I built for NinjaTrader. So it's in section 2.4 of the course, and you can have access to it for free. And that's what I use, and that's how I have all these ATRs and all this other stuff. Okay. Okay. How long did it take to become profitable? Okay. So I've talked about this before. My journey in trading was, unfortunately, I became profitable really fast, and that actually led to me being unprofitable for a while. So when I first started trading, it was during 2017, and I was trading crypto and a little bit of futures as well. But crypto was booming, so I started to become profitable almost immediately, because all you had to do back then was buy a little crypto and you were profitable. So I was profitable way too fast, and I thought that trading was easy. And then I was wrong. It was not easy. So I got like overconfident and I lost a lot of my gains. And then after that, it was kind of an up and down battle for several years. An up and down battle of like, I'd be profitable for a long time, then I'd be unprofitable for a period of time. And it was like an up and down to where I felt like I was almost breaking even over time. And then I'd have periods of winning, periods of losing, periods of where eventually it would just sort of be even. So I'd say it took me a few years. And then I had a strategy that I traded for a while that was profitable, but I didn't love how the profitability wasn't like, how do I say, the win rate wasn't super high. And I just would go on periods where even though the strategy worked pretty well, I would tilt sometimes, and it just didn't work for my personality, because if like I would take like 3 or 4 losses in a row, I would be like really stressed out and feel like, all right, maybe my strategy doesn't work anymore, and then I'd try something else and then I'd come back. So I'd bounce around. And so eventually I just committed to doing this price action strategy, because it was better for my personality to know that if I was just patient and read the market right, I would have a way higher win rate. And I actually liked that a lot more for my personality. So that's why I trade like this, because there are strategies that you can trade that have a lower win rate, but they have pretty good profitability over time. But you have to have the right type of personality to be able to handle like the amount of losing that you have and not abandon the strategy and stick with it and all that. Because there's more than one way to be successful as a trader. There's more than one strategy that works. But you have to make sure that the one that you're using works with your personality. And for me, this one works the best for my personality, because I like stacking small wins. I don't need to have a home run trade. I just need to stack small wins. Can I explain more about spike in channels? Okay. So spike in channel. Well, let's see. We don't really have a good spike in channel today to show. Let me look at some. Okay. Yesterday's probably also not. Okay, here's kind of, I can see one on a couple days ago. Okay, so we weren't trading this time frame a few days ago, I don't think, right? Well, we were trading this part, but we weren't trading later in the day. But this is a spike in channel. So you can see it on my screen here. Here, let me zoom out real quick. So you can kind of see this moves up and turns into a channel. So a spike in channel looks like this. I'm going to keep it really zoomed out for a second just to show how this works. This is kind of janky because of the way I'm drawing this, but I'm just going to show you. There's kind of a channel there. I don't have this precisely in the right spot, but there's kind of a channel there. But really what you have... Oops, sorry, I didn't mean to peek the mic. What the heck? Why did it do that? All right. Why is my mic... Hold on, my mic is being weird. Hang on one second. Sorry, the mic was randomly, my computer increased the volume. So I apologize. I have no idea why it did that. So I'm sorry if the audio got really funky there. It like the default settings for some reason had raised it, which is weird because I didn't change anything. Okay, so what you really have is something like this. There's a spike in here, and then it turns into a channel. And so what happens with a spike in channel is you get some sort of break of a trend line like this, and then you get like a little channel that runs. You know, this one, technically, you could probably even draw it off of there, but in real time, I would have drawn it off of those closes. Probably this, like this, and then you have a spike in channel. That's what a spike in channel looks like. It's a spike up and then a channel. There's kind of a channel there too, but really it's a spike in channel. It got flat. And what do you specifically want to know about it? That's not even a great one. It's just an example of a recent one. But what exactly do you want to know about spike in channels? A channel like this, it works kind of like a range. It's like a biased range, right? It's almost horizontal. There also are spike in channels that will look like this, where you get some sort of like, you know, a little move up, and then you get a close outside, and it will turn into like, you know, something like this. That is a pretty normal looking spike in channel, and you just trade it like an uptrend. Yeah, it's just a flattening of a trend, right? Because a healthy trend looks kind of like this. It's kind of like a 45 or so degree angle. Now, I know that the angle is kind of ambiguous because of how you scale your chart, but roughly that's kind of what it looks like. So when you get something where it looks like this, it's not a sustainable trend. It can't go like that for very long. So typically what will happen is if it's going to continue, it will flatten out and it will do something like this. And in which case it's like a healthier angle. So you just keep trading it as an uptrend. Basically when you get the close outside new high and then it doesn't reverse and it just keeps making higher highs, higher lows. Once it's done more than like 2 swings, higher highs and higher lows, then you probably know, okay, it's continuing here. So that's how you do that. Okay. I'm going to zoom in on the price action here. Yeah, you're welcome. You're welcome. Yeah, I mean, news for us, you said that the spike is usually a flush of buyers or sellers, like could be institutional traders. Yeah, it could be. I mean, listen, here's the thing. I can't tell you how many times I've heard people say, well, you know, there's always people trying to come up with, there's always people that claim, oh, this is an institutional buyer, this is a whale, this is that. Oh, I looked at there's absorption there, and that's why this happened, or there's whales there, they're spoofing the order, and then they do a flush out, and there's all these terms. None of it really matters. None of it really matters. It doesn't help. It doesn't help really with reading the price action because and also nobody really knows, because all that it really is that people put their stop losses in a certain area. And sometimes if a bunch of people start piling on trades in an area and their stop losses are all kind of in the same area, then when the price goes against them and it starts to create a cascading effect of market orders stopping people out. So when you see those spikes, sometimes all that it really is that a bunch of people are piling on in one direction, and then there's a flush of sellers who enter the market. Let's say it happened here, right? Like here's an example. Let's say right here, a bunch of people were going long out of this consolidation, and they all had their stop losses below these bars. Well, as this thing comes up and touches this level, a bunch of shorts start entering the market. This one pulls back, more shorts start piling on. And then when it comes down here and it hits all their stop losses, it creates a cascading effect of just orders having to be filled. So all the market orders keep triggering. the stop losses, and it creates a cascading effect, and that's why it dumps through so hard. It's really just a bunch of stop losses getting run. It doesn't mean that there's an institution there. It could just mean that a bunch of people went long and more people went short, and the sellers beat out the buyers. Like, it really doesn't have to be that there's some whale. I mean, every one of these candles here is 2,000 trades, because I use the 2,000 tick chart. And it's not like, you know, if you look at the volume of it, 2468, 2444, 2428, this literally has less volume than this. This bar coming up had more volume than this one going down. This bar right here, 2511, these two green bars had more volume going up than this red bar going down. It's not always just about like a whale, like completely bunking the market. It's really not. And when you trade tick charts, you'll see that. There's just a lot of people buying and selling in different places for different reasons. This to me was there was probably a lot of limit orders up here of people that were anticipating the triple test and front running the triple test. And they won that time. Limit orders started getting filled up here to go short. And that's why this thing opened and immediately went lower. And then when this thing pulled back, a bunch of people piled on more limit orders to go short because they saw that there was follow through probably going to happen here. And then it dumped through all the people's stop losses who went long on this bullish bar. I mean, it's pretty standard stuff, but like none of that really matters in real time. None of it matters that much in real time for like your trading strategy. So, I mean, that's the way I look at it, at least. You know, like you'll see these people out there. I used to get into arguments all the time with them. I would have like there would be like the ICT people. They would show up in my stream and start trying to talk trash. And they'd be like, well, that's because there's institutions here and smart money and all this stuff. And I'm just like, yo, guys, like, come on. Like, what are you guys talking about? Like, you guys are just drawing imaginary boxes. They're like, well, there's a fair value gap right here, and then fair value gap, and they would be saying all this stuff. And look at this, with this one, when it bounced to that fair value gap, I made all this money. I'm just like, guys, get out of here. Like, you know, like there's a million times that you can show that those things fail. It's not really like, yeah. Anyway, and I'm not trying to pick on you, News for Us. I'm just letting you know like that. Really, the most important thing is, when you read the price action, do you know which way it's going? Do you know which way it's going? Do you have like a strategy that, you know, that gives you entries with the way that the price action is going? You draw your trend lines. You know which way things are going to be moving. You're following rules that keep you on the right side of the market so you don't take bad entries. Like, that's the most important stuff. I mean, I guess the most important thing is, do you have something that makes you money consistently? Then that's the most important. And then for me, it's price action, and that's the way I trade it. Right now, I'm drawing this as a possibility. This is not guaranteed. We only have 1-2 swings. We don't have a third swing on the upper side, so this is not a guaranteed trend line. I'm just drawing it because clearly we're breaking through the bottom here. I would be aware of these lows down here. I'll be aware of these lows. We are bouncing there. So there's a possibility that these lows hold. You can kind of see these lows here. Possibility that they hold. I'm not putting much weight on that. But if it is going to be a range, then that would be like possible range low. So we'll see. Yeah, okay. I thought that might have been in there a little bit. Yeah, I'm just not a fan of that stuff, man. I'm not a fan of it. If it works for people, that's great. You know, but not a fan of it. I just think like it's like if you think of the market as this like manipulated algorithm thing and everyone's getting screwed over, it causes you to have a mindset of not taking accountability for just losing your trade. You start to blame everything on the market, and it's literally the worst mindset that you could have as a trader, is to blame. You can only blame yourself as a trader. Like, that's it. You can't blame the market. The market is ambiguous. It's people just are buying and selling. And you can't blame the market when you have a loss. You have to take accountability for what you do. So I feel like a lot of that ICT stuff, it's the wrong way to think about it. It's like trying to make you think like a conspiracy theorist of like the market is somehow out to get you. And that is just not the case. It's just really not. Okay. Yeah, that's cool that you do Brooks price action. I don't do the Brooks stuff that much. I have the Al Brooks books on my shelf over there. You can kind of see them in the corner. But I don't I trade a little bit of a different style. I'm more of a scalper. So I use the 2000 tick chart and I go for a take profit. My TP is written up here. Right now I'd be going for 10 ticks. Because I round up here, obviously. 9.95 is basically going for 10 ticks. That would be my take profit for my scalp, and then I leave runners. It's based on the ATR. I base it on the 14 period ATR. But I track the 7, 14, and 21 ATRs because I like to see how the market is changing. For example, if the 7 period ATR starts to be lower than the 14, and the 14 is lower than the 21, then overall the ATR is starting to drop and the recent candles are getting smaller. So you can see now I'd be going for 9 ticks, not 10, because it's too far away from 10. I don't round up unless it's really close. Yeah, for sure. For sure. For sure. How are you liking the Brooks stuff? How are you liking it? Do you trade the time frame chart or do you trade the tick chart? And also, are you doing it with the books or the course? Just curious. I never did the course or anything. But always good to get feedback from people on how things are going for them. All right, I'll be right back. All right, I'm back. I'm back. Okay. All right. No new questions? Okay. So it looks like maybe it's going to respect this. We'll see. All right, so this blue line is obviously not... That's not the level. I just drew it as a possibility, so we'll get rid of it. There's no reason to have lines all over the place. No. No, I don't... Oh, wait, hold on, sorry. Hold on, there's actually 2 questions that came through. All right, so news, you said. Books only. You're scalping on the MES. Okay. Trying out. Okay, I see. Okay, yeah. The 1K chart on MES is similar to the 2K on the ES. The 5-minute chart, I don't really know how you could scalp that thing because the bars are so big. I mean, I guess if you're just trading the MES, I guess I could see how that could work. But like, so when you scalp the 5-minute, are you putting your stop loss below the signal bar and having like a, 75 tick stop loss? I'm just curious. That seems ridiculous. And also, if you are doing that, what is your profit target? So I'm just curious how that you structure that when you're doing that. I'm curious. Okay. Okay, and then Jay, you said what is it? It's Jay. Jay Lion. you said on large signal bars, would I risk taking the trade with a fixed stop loss, for example, if all other context is perfect, and see if it continues, or a hard rule? No, you always one tick above or below the signal bar. Always. I never put my stop loss anywhere else. And I can tell you, there has been many times where I'm so glad that I did it one tick above or below the signal bar. I have had a lot of times where it came to within one tick of my stop loss, and I didn't get stopped out, and I won the trade. That's happened so many times. If my stop loss was anywhere else, I would have lost the trade. So I don't know. I don't. I always go one tick above or below. But what I will say is this. If the bar is enormous, you need to assess what, if you want to change the size that you go in on, right? That's up to you. Like if it's like a 40 tick bar, you might not want to go in with your normal contract size versus if it's like a 10 tick bar. You know what I mean? Because your chance, if you lose the trade on a 40 tick bar at your normal size, it's like losing 4 trades of your normal size on a 10 tick bar. So you do have to be aware of that aspect. What some traders do is if it's a huge bar, they let the bar break higher and then come back and they drop a limit order to get a better entry and still put their stop loss below it. You can do that. Personally, I don't like to. Most of the time I see it as if it's a big signal bar, it's probably more likely to work. So, I mean, even though it's a little scarier, it's probably more likely to work a lot of the time. There's a lot of times there's follow through. Oh yeah, I don't mess with that news. Listen, DCA strategies are not for me. I go all in. I go all in, my full contract size in one spot. My stop loss is all the way out in one spot. There's no averaging down, no averaging up. It's all in at once, all out at once, with the exception of I scalp 80% at my first target, move my stop to break even, and have a runner for my second target. But I enter all in one spot. My entry and exit, my entry and stop loss are always the same. I go long one tick above the bar, short, and with my stop loss one tick below, and the opposite for shorts. And then, you know, have my scalp. I use an ATM strategy, so it's automatically like does it for me. And I have a bunch of different ATM strategies for different ATRs. So if they, like for example, right now the ATR is a 9. This one is for if the ATR is a almost a, it's a 4.5. If the this one is if I was going for 10 ticks of profit. So this is slightly off. But basically if I was going for 9 ticks right now, here, let me just pull up the, hold on a second. Let me pull up one. Let me pull up that one in particular. I was on the wrong one because, here we go. This is the one for 9 ticks. So the TP is right about a 9 right now. So this is my strategy. If I'm gonna go, this is like if I'm trading with 5 contracts, stop loss is just randomly set to 24. It's not actually my stop loss. It's just that's just an arbitrary thing, and then I move it once I enter the trade. So I got my take profit here at 9 ticks, because that's what it tells me to do for my scalp on 80% of my contracts. 20% are here going for, you know, just an arbitrary 48 ticks. But then I have a custom thing here. So at 10 ticks, when it ticks through my order and it fills my initial scalp, it puts my stop loss at break even plus 1. A lot of times I use break even plus 0, so actual break even, if I'm going for less than 9 ticks. If I'm going for 9 ticks, then I'll do break even plus 1. So like if I'm going for like 6 ticks, I'll just go to break even, because otherwise I get stopped out at the plus 1 all the time. So it just depends on the volatility and what's going on. And then I just manually measure, or I manually move the targets for like the runner. But when I enter with the 24 tick stop, I move it to 1 tick above the bar or below the bar. Okay. Okay. What up, Lucid? Good to have you. Misha, so you're wondering what should the account size be to trade 5 MES contracts? I mean, I think that's kind of up to you. It's like you want to make sure that you have plenty of wiggle room. So, you know, minimum size, the minimum size that you need, minimum, would be that I think that you need to have, like, so I don't, the MES is different. I never traded the MES. I've always been an ES trader. I always tell people that on the ES, the minimum is $1,000 for every one contract you're trading. That's the minimum, in my opinion, that you should have, but you really should have more than that. That's the minimum requirement that you should have to even consider it. So I think on the MES, the way that would translate is that you would have at least $100 for each contract that you trade, but really you should have more than that because you need more wiggle room than that. So the safer way would probably be to have at least $200 for every contract that you trade. So that would be like probably $1,000 to trade 5 MES contracts. That's probably about right. And some people would say you should have even more money than that in there and be even more conservative about it. But it just depends on how good your strategy is. Really what you want to do is just wait to scale up your contracts until you're having success anyway. Okay. By the way, everybody, I do have a call coming up today, coming up soon. So I won't be able to stream for too much longer. But I can stick around for about 5 more minutes. So if anybody has any questions, feel free to drop them in. I got about 5 more minutes that I can stream. Yeah, I'm actually having a good time streaming today. I kind of want to stay on longer, but I don't want to blow... I can't blow off the call. It's important, so... Yeah, it's good stuff. Good stuff. We got to move up here. There's a first entry short. A second entry short could form. Possibly. We don't have a new high made on this little up channel, but you still could get a decent one here. Sorry, my dog's barking if you hear him. Everyone's yelling at him. Yeah. Thank you. I hope you have a good weekend too. Yeah, there's a lot of different ways to trade. A lot of different chart setups. I keep mine simple. I keep mine really simple. All right. I'll be back to stream on Monday. On Monday, my stream will be at the normal time, 8:30 a.m. Pacific time. And then, of course, everything else will be... the other streams for the week will be in the school community on Tuesday, Wednesday, Thursday on Zoom. That's all in the chat. It's also in the description. And then I have on Friday the stream on YouTube again. So that's the schedule. Oh, that's sweet, Lucid. Yeah, that's awesome. Yeah, that was a fun time. That was a fun time when I did that. Okay, so also I'll put a link here in the chat for anybody who's interested. If anybody wants to join my other community, which is free, I'll put a link in the chat. It's another school community. It's free. It's not really about trading. It's about mindset and NLP, neuro-linguistic programming, spirituality, self-improvement. It's for men. So check it out. Check it out. Yeah, some people like that news for us. Some people like that. I don't like to stare at a super bright white screen. It's too much blue light. I just like, it's too like intense. So I keep everything on dark mode. I actually think it's better for your eyes if you're on dark mode. It's easier to look at. So I do that. That's my style. So I put a link there if anybody wants to join it. And there's links in there to like there's links in there when you get there to like my other YouTube channel and all the other stuff too. But I wanted to put it there just for anybody who's interested, if anybody wants to check it out. Another way to stay in touch. Some of the stuff in there will definitely help with trading and mindset. All right, let me see. So I just put it in the chat. All right, last minute here. So if anybody has any final things, drop them in. Yeah, Lucid, I used to use gray, but I like the black. I think it's just nice and clean looking. I got blue eyes too, but I still like the dark background. I use dark mode on literally everything. If I have to use something with a white background on a computer, I get annoyed. Like whenever I have to do spreadsheet work and it's white, I'm just like, oh man, this is hard to look at. All right, everybody. Thanks for being here as always. I appreciate you all. I'm gonna sign off now, and I will be back on Monday. So I will see you all then. Take care, everybody. Yep, that's awesome, South Florida. Anyway, I gotta go now, but thanks, everybody.